Gap is eliminating 500 corporate positions, the company confirmed Tuesday. The company announced that it is cutting back on spending as sales plummet. It is also ending of its partnership with Kanye West's Yeezy brand. The company headquarters offices in San Francisco and New York are the main targets of the layoffs. In its Q2 earnings call, Gap said that sales are weakening and it retracted its full-year guidance. Gap is just the latest in a long list of companies announcing layoffs in 2022. This video continues our coverage of the wave of layoffs sweeping the United States. What does it mean for the economy? And what does it mean for the future of the United States? But before we get into all of that, please press the like button and leave us a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Today, Gap announced that it is cutting 500 corporate positions at its New York and San Francisco offices as sales and profitability are declining. The job cuts will affect almost every department, according to a representative for the company. The San Francisco-based Gap has experienced a spate of negative developments recently. The product assortment in its Old Navy stores were found to have serious issues. More than half Gap sales are from its Old Navy brand. Kanye West announced that he was terminating the Yeezy partnership with Gap. West accused Gap of breaching terms of the partnership agreement. West said, Gap failed to distribute Yeezy products at its stores by the second half of 2021. Gap did not create dedicated Yeezy Gap stores as promised in the agreement, West noted. I am dissatisfied with progress on launching physical Yeezy stores in partnership with the retailer, said Kanye West in an interview. Gap confirmed the termination of the agreement with West, but will sell the remaining Yeezy products in its inventory. Gap also ended its unsuccessful attempt to create a line of inclusive clothing sizes. Gap CEO Sonia Singhal abruptly resigned in July after about 2 years in the position. So, the company is also looking for a new leader as it tries to rejuvenate sales. During its Q2 earnings call last month, the company retracted its full-year guidance and did not offer any revised guidance. As is usual in earnings calls these days, company management cited deteriorating macroeconomic conditions. Gap reported that it had 97,000 employees in a regulatory filing in January. About 9% of those employees were designated as corporate employees. Gap brands have declined in popularity during the past few years. And the partnership with Kanye West was targeted to reverse that trend. All of this comes as the U.S. Federal Reserve is aggressively raising interest rates. And the United States economy is teetering on the brink of recession. Inflation is raging and consumer spending is in freefall. Interim CEO Bob Martin said, the company would take actions to better optimize profitability and cash flow in the near term, reducing operating costs as well as impairing unproductive inventory. The company made promises about margin improvement over the next few years which realistically are out of reach, said Morningstar analyst David Schwartz in an interview. If sales continue to be soft, the only way to improve margins then is to cut costs. It's unfortunate, but the company's been struggling, Schwartz continued. Other retailers have also dismissed staff in recent weeks. Bed Bath & Beyond is eliminating 20% of positions across its corporate and supply chain operations. And Rent the Runway confirmed that it was laying off about 25% of its positions. This year, it is clear that Wall Street analysts are valuing profitability over prospective growth. As a result, unprofitable companies' shares are getting punished. Weakness at large retailers is coming just as big tech companies are cutting jobs. A year ago, this seemed unthinkable. But not only has it started, it is accelerating. Here is the list of companies that have announced layoffs in August 2022 alone. Snap, owner of Snapchat, announced a 20% reduction of employees or 1,300 workers. Snap also initiated a major restructuring of their online platform. Apple announced that it is cutting 100 positions and slowing hiring and spending. Oracle, the worldwide software giant, has cut hundreds of positions but declined to say how many. Most job cuts are said to be in the customer service unit for U.S. customers. Twilio has announced a layoff of 11% of its employees. Real estate technology platform companies are also cutting jobs. Redfin and Zillow each cut 20% of their respective workforces. Compass is in its second round layoffs this year. Crypto trader Coinbase announced a 20% workforce reduction. Crypto lender Genesis cut 20% of its workforce due to what they call turbulence in the cryptocurrency market. Online stock brokerage Robinhood cut 23% of its employees. This is the second round of layoffs for Robinhood so far in 2022. Connected exercise pioneer Peloton has cut 800 employees, announced several store closures, and raised prices. Even companies that are not considered to be in the technology space are announcing job cuts. Investment banker Goldman Sachs is cutting hundreds of positions. Walmart is cutting 200 corporate employees. The job cuts are focused on merchandising and real estate. Car giant Ford announced that it is cutting 3,000 salaried and contract workers. The job cuts are in India, Canada, and the United States. Wayfair, the Boston-based home goods company, Wayfair is cutting 870 employees worldwide. HBO and HBO Max cut 14% of its employees, which is about 70 people. Gannett, the largest news publisher in the United States, announced the elimination of dozens of positions. Electronics retail giant Best Buy has cut hundreds of jobs in its stores across the U.S. due to what they call a challenging macroeconomic environment. Online prescription glasses retailer Warby Parker is cutting 63 corporate positions. This is about 2% of its worldwide employee base and 15% of its corporate jobs. Google, which has not yet formally announced layoffs, said that there would be an overall review of sales performance and performance in general. According to the report, the warning states that if third-quarter results don't look better, then there will be blood in the streets. Last month, Meta Platform CEO Mark Zuckerberg told employees that the company plans to reduce its hiring target for engineers from 10,000 to between 6,000 to 7,000 amid the market downturn. Realistically, there are probably a bunch of people at the company who shouldn't be here, Zuckerberg said. But, what do you think? Please leave us a comment below and hit the like button. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Please share this video on social media. Thank you for watching.